G'day Matt family, George Samuels here, reporting for the February RBA announcement. I'm going to do things a bit differently this time. I'm going to talk to some of the team about their feedback to what's happened because obviously the rate went up 0.25%. So let's go first to Jack Brown. Jack is a senior credit analyst at MAD. Jack, I'm just doing a video for the RBA. Can you give it some advice? What's happening with the mortgages right now, especially in response to the RBA putting up the rates?
Yeah, it's pretty interesting because will fixed rates make a comeback? Do you think the 2-year fix might be value now? I'm not sure. What do you think?
Yeah, because at one point later last year, the fixed rate was so much higher than the variable. People weren't even actually considering fixed.
Not at all.
Are you saying the fixed rates, the gap is a bit lower now?
Possibly. 5.29 at the moment, 2 years fixed. Would you fix?
5.29 2-year fixed rate, variable rates probably going to be similar. I think it's either maybe not fixing the whole lot, but maybe considering a variable split with a fixed. Thanks, Jack, for that information. So what Jack spoke about then was fixing your loan. Really good option. You can do a split loan. If you want more information on that, have a look at that video, gang. Let's go see who else wants to get some feedback. Now I've got Matthew Prentice. Matthew Prentice is a senior financial planner at Mad Life. Matt, people watching this, rates have gone up 9 times now in a row. What are you saying to the people who are cash flow affected by all these rate increases? Any feedback or advice you can give them?
Yeah, feedback initially, everybody's in the same boat at the moment. Most of our conversations are cash flow wise. So I guess if anyone's struggling, reach out to the Mad Life team, built on the basis that everything starts with a budget. So feeling comfortable in yourself and being able to do what you want to do, refinance, buy a new house, everything starts with a budget. So come talk to us, free service for our Mad clients to come and get a budget done and more or less feel comfortable that you're going to survive the current increases in rates.
Takeaway point, don't go sell your house, all right? Speak with a financial planner, let them do a budget. They're not going to send you a bill up front. We're going to talk to you. If you do want to go down the financial planning route, you can pay through your superannuation for your fee, but the first meeting, of course, is always free. Next, let's talk to Costa. All right, Costa.
My hair.
Costa, your hair's looking fantastic. Costa Dimitriou is a Mad mortgage broker. Costa, what's happening? What's happening with applications? What's happening with banks? What are you seeing?
I think leading into this year, I think we're expecting a lot more refinances compared to purchases, but we're seeing a bit of a 50-50 split. Last week was our biggest number of submissions. It was half refinance, half purchases. So there's still a lot of contracts coming through, still a lot of interest. Haven't heard too much about clients worrying about interest rates at this point. That might be because we did the right thing a couple of years ago and fixed in majority of our portfolio for 4 years. But I think a lot of those have fallen off end of the year and next year. So we've just got to make sure we stay on top of it, continue to reprice and ensure we're on the cheapest variable. But market is still pumping. There's a lot of interest in Brisbane, especially from down south. Clients moving up to this beautiful weather. But yeah, I think we're in for some crazy times ahead, especially with the amount that's been invested as well in Brisbane.
Costa, that's really good advice, mate. Everyone who's watching this and you're a Mad customer and your fixed rate's expiring, you would have seen an email from our team. We're trying to connect with you and be on the front foot so we can reprice your loan. So when it comes off fixed, you're on a Mad deal. Let's get Lockie. I call Lockie like the economist of the office, seems to know a lot about what's going on. Lachlan, what's your response to the RBA 0.25% increase?
Hey George, yeah, well that brings the interest rates to a 10-year high for Australia. Highest they've been since close to the GFC times back in 2008. But I think our property market's still very strong. We've seen a lot more room for negotiation in the property market, so clients being able to actually negotiate with the sellers on things like price and finance conditions and things like that. So yeah, I think definitely still a lot of room to buy. Like Costa said, we've still got plenty of purchase applications coming through, so just keep your eyes peeled.
And what about you, mate? I know you want to buy a property. Has all these rate increases scared you of you?
Definitely not. Still planning to buy a property and hopefully this year.
Thanks, Lockie. Appreciate it. All right, gang, there you have it. There's some feedback from the Mad team, from our credit analysts and mortgage brokers and even one of the financial planners. If any of you or your family are concerned about rising interest rates, give Matt a call, do a free home loan review. We're saving customers thousands of bucks. There's heaps of Mad deals out there. Thanks for watching and see you next month.